Hello everyone, welcome to Options with Doug. Before I go any further, I do need to make an announcement. Beginning today, my streaming schedule is going to change. I will only be streaming on Monday, Wednesday, and Friday, so there will be no streams on Tuesday and Thursday. So 3 days a week, same time, Monday, Wednesday, and Friday, 1:30 p.m. to 2:30 p.m. So welcome to Options with Doug, streaming 3 days a week, Monday, Wednesday, and Friday. And questions, comments are welcome. I'll go over my contact information in just a minute. So if you have any questions, comments, concerns about this new schedule, please feel free to contact me. All comments, questions are welcome. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. And again, my name there is at Doug Pless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly the large cap tech stocks that I follow, the Magnificent Seven, as well as the equity futures, equity index futures, S&P 500 and Nasdaq. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and ES is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index, QQQ is the ETF version of that index, and NQ is a derivative of NDX. So when traders buy and sell puts and calls in NDX, market makers take the opposite side of those trades and they will hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range, as well as the directional bias directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. That's important for today and for setups or entries and exits. All right, so when I'm talking about setups today, I will be focusing on an underlying asset. For example, in the S&P 500, setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. So the setups that I'm talking about will be appropriate for all those versions of the S&P 500. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. All right, Stephen, welcome. Glad you're here. And Stephen asks, what is the reason for the change in schedule? Bookmap wanted to make a change to the schedule. They're just modifying their streaming schedule. So that's what they wanted to do. So that's fine with me. I do this to, again, questions or comments are welcome. I do this because I enjoy the interaction and I enjoy helping people, introducing them to this new approach to trading. So any questions, concerns, comments are definitely welcome. All right, here's my agenda for today, Monday, April 1st. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so let's start with economic data and events. First of all, today, ISM manufacturing PMI data came out at 10 a.m. That was greater than expected, also greater than the previous number. Let's just take a look at the S&P 500. And there did not seem to be much of a reaction, really, to that data coming out at 10 a.m. Maybe. But the S&P 500, along with most everything else, the Nasdaq for sure, was already moving lower after this initial move up just at the cash open. So there's the 10 a.m. data, not much of an impact. All right, for the rest of the week, on Tuesday, there's no high impact data. On Wednesday, the ISM services report comes out at 10 a.m., and then Jerome Powell will be speaking at 12:10 p.m. Eastern Time. No high impact data on Thursday, and then the big data release for the week is the jobs report. That's on Friday, 8:30 a.m. Eastern Time. And there are also a wide variety of Fed speakers throughout the week. All right, so this is the S&P 500. Let's move on to positional analysis now. This is the S&P 500 futures, ES futures, and Bookmap. Before I take a closer look at this chart, I want to step back, take a look at a larger time frame, and I'm going to start with the SPX, the underlying index. This is a one-day chart for SPX. The current rally began last year, October 30th. So far, SPX has rallied over 1,150 points from low to high during that rally. All right, so that's a one-day chart. This is Thinkorswim. Now let's take a look at a 1-hour chart, just so we can take a look at that top of that uptrend. So there's the green line marking the uptrend from low to high. So it looks like last Thursday SPX made a new high. All right, during this year, 2024, the call wall, SPX call wall, has moved up from 4,800 all the way to 5,400. That's bullish. And then now back down to 5,300. More about that in just a minute. All right, so let's move on to the levels now. All right, so the levels on this chart, first of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. That's based on the closing price from the previous week. In the case of this week, when Friday was a holiday, that was the closing price on Thursday. So again, that's based on the options market. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. That's also based on the options market. Note that SPX traded down to the lower daily expected move today. And again, this is based on the closing price, in this case from Thursday. And I do post these numbers in the Options-Doug chat channel and Discord every day. All right, so the other lines on this chart are Spotgamma levels. Those are the red lines. These levels are based on gamma-weighted open interest, Spotgamma takes open interest data that's provided by OCC. They apply their algorithms to that data to come up with these levels. Again, this is based on gamma-weighted open interest. I'm going to point out the key daily levels. First of all, the put wall at 4,800. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is 5,000. That's the absolute gamma strike. So that's where most of the gamma-weighted open interest is concentrated. That is the strike with the absolute positive and negative gamma, the highest absolute positive and negative gamma. Right then above that is the volatility trigger at 52.45. That's this VT here. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that SPX is trading below its volatility trigger today. And then finally, 5,300 is the call wall that I mentioned before. That's the strike with the largest net positive gamma that can be expected to act as resistance. And again, that level did move lower from last week. On Thursday, it was at 5,400 and moved down to 5,300 today. So today, the call wall moved lower, and the volatility trigger and put wall moved higher. So really, I place a little bit more weight on the move down and the call wall. That's more in play than the put wall, closer to price. All right, so again, volatility trigger, put wall shifted higher, call wall shifted lower. All right, let's wrap up our view of SPX with a 1-minute chart so we can get a close look of the levels in play for today. All right, so this is about 2.5 days worth of data. Here's the top of that trend line. And note that SPX has been moving down pretty much all day, just a few minutes after the open, making a series of lower highs until finding support at the lower daily expected move. And note now SPX is trading below the 52.45 volatility trigger. All right, let's take a look at Bookmap. In Bookmap, I have my own cloud notes, so I can show SPX levels. So there's the SPX volatility trigger at 52.45. I'm also showing SPY levels on this chart. This is just a round number. It's not a Spotgamma level, but it has definitely acted as support today, the 521 level. And there's the SPY 522 volatility trigger 0 gamma level. So right now the S&P 500 is trading below both volatility triggers for SPY and SPX. All right, now there's a difference between price and ES. That ES offset today is somewhere between 53 and 54. I'm using 53. So I'm showing the volatility trigger. Let's see, where is that? That's the SPX 52.45 volatility trigger at ES 52.98. All right, so here's the, so again, I have SPY levels in my own cloud notes. SPX levels, there's SPY level, SPX levels, and then also key levels for ES, lower daily expected move, and there's the big round number, the 5,300. So around this 5260 level, combo 3 level, price oscillated around that level, made a series of lower highs, and then finally, after the final test of the 5260 level, moved lower. Game now asks all levels from Spotgamma. The gamma levels are. So any label in white, that's a Spotgamma level. There's again the SPY volatility trigger at 522, SPX volatility trigger. Then I have round number levels on this chart. There's the SPY 521, and also key levels for ES, lower daily expected move, big round numbers, the zeros and the 50s. So again, my color coding, the way I look at this is I have the Spotgamma levels shown in white. And I use my, Spotgamma does provide cloud notes for Bookmap and other trading platforms. I prefer to have my own notes so I can show additional levels all in one column. All right, so that's the S&P 500. Let's move on to Nasdaq. For SPY, shifts and levels, the volatility trigger shifted higher, just like SPX. And for SPY, the call wall actually shifted higher to 530. SPX put wall shifted down to 5,300. SPY call wall moved up to 530. So more in line. And you're welcome, game now. All right, so here's the Nasdaq, NQ futures and Bookmap. And again, before I take a closer look at this chart, I do want to take a quick look at the underlying index charts. Here's QQQ. $447, some chop around that level, then acting as resistance. Then resistance at 446, 445. And then finally support at the 443 zero gamma level. And note now QQQ is trading right around its volatility trigger at 444, 444. All right, so round numbers in play for QQQ today. We'll take a quick look at NDX, not so much. Just to be complete here, NDX, big gap up today, and then series of lower highs. All right, back to NQ futures. Again, right after this big whoosh up at the cash open, NQ started to make a series of lower highs and then broke lower. Finding support at the QQQ 443 zero gamma level. All right, so just like ES, I have my own cloud notes, so I can show QQQ levels. Again, there's the 443 zero gamma level, 444 volatility trigger, also NDX levels. There are the two levels that were shown on the previous chart. Combo 1 level, Combo 4 level. And then finally, the big round numbers for NQ. There's the 600 level acting as resistance. Also the upper daily expected move. NQ did trade briefly above its upper daily expected move today. All right, shifts and levels for Nasdaq. There were none in NDX. And the only shift higher for QQQ was the call wall shifted higher. So just like SPY, the QQQ call wall also shifted higher up to 460. So according to this, there's plenty of room to run higher for Nasdaq, according to the QQQ call wall. All right, let's wrap up positional analysis. Let's take a quick look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. I check this every day for the S&P 500 and Nasdaq. So this is at the beginning of the day. This is showing that for the S&P 500, SPX and SPY, market maker's position on the gamma curve at the beginning of the day was positive. So in a positive gamma environment, market makers, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. And that may no longer be the case because SPX and SPY have moved below the volatility trigger, and the Vanna model is in play with VIX rising and price falling. And for QQQ, that number is negative at the beginning of the day. QQQ negative. So in this case, on this portion of the gamma curve, Spotgamma assumes that traders are long puts, market makers are short puts, and they hence the negative gamma, they have to trade with price to hedge their delta exposure. Let's just take a quick look at the Vanna model. And I'm going to skip over the explanation of this other than to show the purple curve shows how market makers' delta notional may change with changes in price and implied volatility as the Vanna effect. Right now, SPX is trading right around 52.35. So right around here, where I'm holding, so right around here. All right, so as price moves lower, implied volatility increases, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. All right, so that's what's happening with Vanna model. So the put Vanna works both ways. So in this case, as price is falling, VIX is increasing. This is VIX for today. Dark shaded area is the 9:30, the cash session today. So VIX is up just right around 8% today. Price falling, VIX rising, market makers' delta notional will increase. That's shown by the purple curve as well as the, again shown by the purple curve. So market makers, in this case, on this portion of the Vanna model, are trading with price to hedge their delta exposure. All right, so let's move on. So my thesis for the day was really kind of mixed. So the call wall shifted lower for the SPX, shifted higher for SPY and QQQ. Also with the volatility trigger and put wall also shifting higher for SPX. I would say my thesis for today was slightly neutral bullish, and that certainly did not play out today. All right, so let's move on to execution now, live data. So everything that we've looked at so far, other than Bookmap, is based on static data that's updated once a day. Spotgamma takes open interest data, they apply their own algorithms to that data to come up with the levels that the Spotgamma levels that change every day. So again, I'm following the how they change, also where they are in the chart. All right, so now let's move on to execution, move on to real-time data. So the first thing that I always want to do is take a look at what options traders are doing. So this is the Spotgamma hero signal, hedging impact real-time options. This is provided to Spotgamma subscribers. What this chart is showing is real-time options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. That's all under one combined signal. The white line on this chart is price for SPX. This is a day chart. Let me zoom just a little bit. So this is showing, and I have it set to show from the cash open, 9:30 a.m. Eastern Time. So the white line is price for SPX, and the purple line is the hero signal. A falling hero signal indicates traders are taking negative delta positions. They're buying puts and or selling calls. Market makers take the opposite side of those trades, and they hedge their delta exposure by selling ES futures. The rising hero signal indicates traders are taking positive delta positions. They are buying calls and or selling puts. Market makers take the opposite side, and they have to buy futures to hedge their delta exposure. All right, I'm going to zoom in on this chart. And I'm going to focus on the setup that I've talked about, somewhere between 10 to 10:05, 10:15. So notice initially, hero signal was rising. Note these flow alerts. They can often act as mean reversion signals. So a couple of flow alerts. Traders start taking negative delta positions. And hero starts to make lower highs. And the S&P 500 starts to move lower as traders are taking negative delta positions. All right, so let's go take a look at Bookmap. Look at the confirmation signals in Bookmap for this short setup. And just a note, when I'm trading, I'm watching 3 screens at the same time. I have Bookmap on my main screen, my center screen, and then I have Hero on another screen, and then I have my trading platform, whatever trading platform I'm using, on another screen, on the right screen. All right, so let's zoom in. We'll go all the way from 9:30 to noon. All right, so again, we know that traders were taking positive delta positions from the cash open. Also, aggressive buyers were buying ES. That's shown by the volume dots in Bookmap. The volume dots show market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So aggressive buyers on the way up, they become exhausted. Aggressive sellers start to come in. S&P 500 makes a series of lower highs, finally reversing right around this 5260 level as the S&P 500 continues to make a series of lower highs. All right, let's take a look now at the subchart. What this falling light blue line is showing is that large traders were selling with iceberg orders. And that started just right around 950, something like that. Large traders use iceberg orders to hide their size. And you can see one with the on-chart indicator that's showing 327 contracts, 2 executions. That's not large, but it is an indication that large traders were selling with iceberg orders. All right, so we know traders were taking negative delta positions. Aggressive sellers, shown by the magenta volume dots. Also the falling cumulative volume delta, that's shown by the dark blue to magenta line. And then also sell stop orders fuel the move lower. That's shown by the falling yellow line. Also the on-chart indicator. Sell stop orders fueling that move lower. until the S&P 500 finally found support at the SPY 521 level. All right, so that's the S&P 500. All right, let's go back to Hero. All right, one thing I want to do is separate out puts and calls. And let me zoom in. Well, I'm going to have to jump back to avoid the auto zoom. All right, let's zoom in on this. All right, so what this is showing is the orange line shows calls. So from the open, traders are buying calls. That lasted until about 9:55, 10 a.m. Call buyers took their foot off the gas, started up again a little bit around 10:40, but basically aggressive buying calls for about the first half hour. So when traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. And they were also buying puts. That's shown by the falling dark blue line. So the direction of these lines are in terms of options delta. So traders were buying puts from the open, also buying calls. 9:55, call buyers take their foot off the gas, continue to buy puts, and price moves lower. So notice right around 10:40, put buyers take the foot off the gas, and they start buying calls again. But this is the setup that I'm focusing on right here. Right around 10 a.m. short, again, call buyers foot off the gas, continue buying puts, price moves lower. Game Now asks, how do you know the exact moment call buyers stop? Well, you can just see on the slope of the line here. You know, it's not exact, but orange line rising, that's showing calls only, for about 5 minutes, 9:55 to 10. That line levels off. Then they start selling calls, and the line levels off again. So I know as long as the orange line is rising, traders are buying calls. If the line levels off, they're not buying or selling. And if the line falls, they are selling calls. All right, so that's the S&P 500. Let's move on to Nasdaq now. And for the Nasdaq, I like to take a look at this Mag 7 signal. So let me show you what this is. This is another combined signal. In this case, for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. These stocks make up a very large component of the Nasdaq 100, and they're key drivers of price, especially in the Nasdaq 100, but also the S&P 500. All right, so let's zoom in on this chart. Puts and calls separated. I'm going to zoom in. All right, so in this case, from the open, really just up until about 9:40, they were aggressively buying calls, also selling puts. That's shown by the rising blue line. So right around 9:40, call buyers become call sellers. Right around 9:45, the put sellers take the foot off the gas and price moves lower. So in this case, the call sellers were driving price just after that first 10 to 15 minutes push up. I'm going to shift back to the total signal. It's a little bit easier to see here. I'm going to have to jump back. So again, this is just combining puts and calls into one signal. This is just a fantastic divergence setup. This is my my favorite setup. So the hero line shifts lower and price levels off, but really doesn't start to move significantly lower. And this is price for QQQ. That's shown in terms of price for QQQ. So hero signal shifts lower right around 940, and then right around 1015, price really starts to move lower, giving you plenty of time for a short setup there. Great divergent signal. Now let's go take a look at Nasdaq. All right, so whether I'm trading NQ or QQQ, I look at the Nasdaq chart, the NQ chart. Let's zoom in on this. And I'm still on the S&P 500, sorry. Let's go to Nasdaq. All right, Nasdaq. We'll zoom in. All right, so there's that quick move up as traders were taking positive delta positions. Right around 940, they start selling calls. They stop selling puts. Nasdaq starts to make a series of lower highs. There's the last lower high in this kind of cluster here, right around 1015, and the price starts to move significantly lower. That's at the upper daily expected move for NQ. Again, volume dots. Aggressive sellers start to come in, so aggressive buyers on the way up. Find exhaustion at the upper daily expected move. Before, resistance was the NQ 600 level. Cumulative volume delta shown by the dark blue to magenta line falling. And then as price starts to move lower, sell stop orders fuel the move lower down to the 443.0 gamma level. All right, so there's a very nice divergent short in Nasdaq. All right, let's take a look at some stocks. We'll start with AMD. AMD was one of the stocks helping to drive that quick move higher at the open. I'm going to shift back to puts and calls. So again, for Mag 7, start selling calls, stop selling puts, price moves lower. Let's go to AMD. So in the case of AMD, fairly similar scenario. Rising orange line, traders buying calls. Rising blue line, traders selling puts. Start selling calls. Take the foot off the gas with puts. Price moves lower. So really two ways to play this. This long, if you're fast in the morning, if you like to trade the open, quick flash move up, and then more of a grind lower. Let's go back to Bookmap. So there's the quick move up to 187. Note the high levels of high liquidity in the order book, typically in the larger, higher price stocks at the zeros and the fives. So this is the heat map and Bookmap showing a history of the limit orders in the order book. So those are above price are limit sell orders. Note there's also limit buy orders at 180, and then the sellers at 185 came back in. Looks like AMD may be moving back up to that level. So quick move up, grind lower as traders, options traders took their foot off the gas. All right, the next is Google. Mateo, hello, welcome, glad you're here. Ask, what is Hero? I'm going to watch this video a few times. Great. I learn something new every day. Thanks for the video. You're welcome. And thank you for your comment. All right, so let's go over Hero again. So let's move on to Google. All right, so first of all, Hero is something that Spotgamma developed. This is available to Spotgamma subscribers. Hero stands for Hedging Impact Real-Time Options. So what this is showing is options trades and market maker hedging activity in real time for, there's a wide variety of instruments. Here I'm showing the Hero signal for Google. There's a total line, and then I have, in this case, calls and puts separated out. So I can show, and this is typically how I look at stocks. So I can show that calls definitely were driving price early in the morning, first 15, 20 minutes. Rising orange line indicates traders were buying calls, aggressively buying calls. When market makers, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So again, rising orange line, traders buying calls, market makers sell the calls. I'm talking about options market makers, and they have to buy stock to hedge their delta exposure. So their only job is to make markets and hedge their directional risk, their delta exposure. All right, so calls definitely driving price. For AMD in the morning, call buyers pretty quickly take their foot off the gas and AMD consolidates. Net for the day, they are buying puts, but that line leveled off right around 11:30. So now it looks like they may have started buying calls again, shown by the rising orange line. Let's go back to Bookmap. Quick move up, like some other stocks, like AMD. Call buyers take the foot off the gas right around 155. And now AMD is consolidating around that level. I'm sorry, Google. Google consolidating around that level. Thank you. You're welcome, Mateo. All right, let's take a look at the next stock, Meta. Another quick move up for Meta in the morning. This is very typical price action for Meta. Aggressive call buyers come in the open for about the first 15 minutes. We'll see what options traders are doing. So go on to Meta. Call buyers, just like Google. And notice today they're taking their foot off the gas pretty quickly. This is just around 9:45. Call buyers, again, take the foot off the gas, not doing much with puts today. Initially, they were selling a few puts. Now that line has pretty much leveled off, and Meta's consolidating. Note that 500 is the call wall key gamma strike. Also note there were some alerts in the morning. These signal significant options activity. This is a big part of my process for the day, watching in the first few minutes for these flow alerts to get my attention. You know, look at something, looking for a setup. And so this is showing, again, significant options activity. I'd rather be trading a stock that has that, again, significant options activity and that key driver for price. All right, so that's Meta. Let's take a look at NVIDIA. A little bit different picture for NVIDIA today. Zoom in a little bit. So more flow alerts again. Note the flow alerts are shown on the call line. That doesn't necessarily signify that these alerts were called with calls. That's just how Spotgamma shows these lines. So really, here in the case of NVIDIA, price, I think, is pretty clearly driven by calls, but the flow alerts are not necessarily indicating that, just indicating significant object activity. Let's zoom in just a little bit. So initially, traders were taking positive delta positions. Rising orange line, buying calls. Rising blue line, selling puts. They start selling calls. And the put sellers take their foot off the gas. All right, so let's go take a look at Bookmap. Go to NVIDIA. Quick move up. NVIDIA makes a series of lower highs, then moves lower. Note the similarity between this chart and the Nasdaq chart. NVIDIA is a key driver of price for Nasdaq. Lower highs, wedge. NVIDIA breaks below VWAP there at 915, just below 915. That's VWAP, that light blue line. All right, let's go back to Hero. So notice as the call sellers finally take their foot off the gas right around 12:15, NVIDIA consolidates, maybe trying to move higher. All right, let's take a look at Tesla. Tesla was weak from the open today. Unlike a lot of other stocks that we just looked at that had big moves up for the first 15 minutes, Tesla was weak today. And notice traders were selling calls from the open that accelerated around 10 a.m. Also buying puts. Blue line, orange line moving in the same direction. That's a very powerful directional indicator. Again, in this case, both moving down. It's hard for price to move any way other than down when both the blue line and the orange line are moving the same direction. All right, so let's go take a look at Bookmap. Let's go to Tesla. All right, weakness in the morning for Tesla. Note all the magenta volume dots there. Cumulative volume delta falling, turning from positive to negative. And then right around 10 a.m. traders start more aggressively taking negative delta positions, and Tesla moves lower. All right, Game Now asks, do I have a video on my Bookmap layout? No, I don't. I'll be glad to answer any specific questions. So just let me know if you have again specific questions about my Bookmap layout, what I'm showing. All right, does anyone have any stocks they want me to take a look at? Let's go back to Hero. All right, so again, you can see right around 10 a.m. they'd already been buying puts, shown by the following blue line. 10 a.m., the call line starts to move lower, and then price starts to move lower. All right, Anurag wants to take a look at Nikola. I think we looked at that last week. Sure, we can take a look at it. I think it was trading around $1. So we'll try. All right, so trading just right around $1 today. Pretty minimal. Pretty minimal options activity. 539K minus, so they are selling calls. Not sure why you would want to sell a call on a $1 stock. One is the call wall, key gamma strike, and hedge wall. All right, Mateo wants to take a look at Mara. Sure. So this is one of the Bitcoin related stocks. Bitcoin miner. Quick move up. Traders were buying calls. That quickly shifts. They start selling calls. Price moves lower. So still pretty low numbers today. As far as notional value, calls minus 1.67 million. So we can just compare that with something like NVIDIA. Calls minus 560 million. So in NVIDIA, they are selling calls, also selling puts. Pretty equal numbers. But it looks like the call sellers have been driving price. You're welcome, Game Now. I suggest for learning more about Bookmap, go to the Bookmap Learning Center. That's a great place to get started. A lot of new videos there. So again, start at the Bookmap Learning Center. And then if you have specific questions for me about my setup, I'll be glad to answer. All right, let's take a look. The S&P 500. I'm going to go back to the total signal here. So I'm going to have to jump. All right, thank you, Stephen. Posting a link to the, and maybe you can just post a link to the Learning Center, or I'll do that later if you have a moment. All right, so kind of an up and down signal for the S&P 500 today. Let's take a look at Nasdaq. All right, so this is a combined signal for NDX and QQQ. Not a lot here. Let's go to Mag 7. Again, big move up in the morning. Traders quickly took their foot off the gas. Then right around noon, they started taking positive delta positions. Now Nasdaq is consolidating. All right, I'm going to zoom out. So let me talk about my process a little bit. So first of all, I can look at different stocks in Equity Hub to see the key daily levels. I do that every day to see how the key daily levels, the put wall, call wall, key gamma strike, hedge wall for stocks, how those levels are changing. And then I also watch for these alerts. So this is how I have Hero set up in the morning. So I'm watching for alerts. And notice I pointed out quite a few of the stocks. There's a lot of the alerts come in right at the open. Something to get my attention where there's significant options activity. Those are the stocks that I want to look at, and those are the stocks that I want to trade. All right, so now let's take a look at this latest signal. This is the Hero signal for Amazon. Latest flow alert coming in right around 120. So far, not much of a reaction to that. The Hero signal is still moving lower. Let's take a look at IWM. Not much there. One thing that Spotgamma has pointed out, when you see a lot of flow alerts congested like that and not much movement, that's an indication of a narrow trading range, chop. Something that I'm not really interested in trading. Let's move on to SPY. Pretty flat price action. AMD flow alert. They came in just after 1. So let's take a look at AMD. It looks like it may be moving higher. One thing that you can do with this Hero signal is zoom in a bit. So I'm just scrolling my mouse wheel. That provides more clarity about this signal. So in this case, the Hero signal acting as a mean reverting signal. When there's a significant shift from positive to negative, or negative to positive in this case, hedging flow can be a great signal for a potential reversal higher, like is shown here. So let's go take a look at AMD. That happened at 107, 108. So let's go to AMD. We'll zoom in. All right, so the Hero signal comes in as AMD was moving higher, lower. AMD finds support. So this gives you time to look for a long setup if that's what you're looking for. Aggressive buyers start to come in, shown by the green volume dots. Now AMD moving higher, back up to the 185 level. Again, that alert getting your attention. In this case, acting as a very good mean reverting signal. All right, last call for stocks. I've got about a minute left. All right, Mag 7, Hero signal starting to move higher. Check S&P 500. All right, so now S&P 500 starting to move lower. Let's just check ES futures. See if that could be a short setup. Go back to Bookmap. ES. All right, so we know the Hero signal started to shift lower. Potential resistance at the SPY 522 volatility trigger. Some aggressive sellers starting to come in, shown by the magenta volume dots. All right, let me check for questions. Anurag asks, what are the chances that ES will go above the 52.97 today? Has tried all day. Don't know. So if traders start taking positive delta positions and ES can make it through all this liquidity shown by the history of the limit orders in the order book, then maybe 52.97 is in the cards. Let's go back and take a look at Hero. So unless the Hero signal starts to shift higher, I would not be looking for a long at this point. All right, everyone, I want to thank you for watching. Thank you for your questions and comments. Remember, no stream tomorrow. I will be back on Wednesday. Again, any thoughts, questions, comments, please feel free to post them in the Options-Doug chat channel or contact me by direct message at Doug P. And I will see you on Wednesday. Everyone have a great afternoon. Again, I'll see you on Wednesday. Bye.